investment committee is comprised of a diverse group of portfolio managers whose experience comprises a broad group of asset classes from stocks, bonds, structured products, to currencies and commodities. Many of the committee members have been working together for multiple decades and have experienced multiple economic cycles together. This continuity is extremely important during inflection points. Continuity makes it easier to develop a game plan during the most extreme market events and exploit opportunities in the market.
The multi-asset investment process sort of starts with a strategic element, and the strategic element really thinks about where are we in the economic cycle, where are we, what type of inflation regime are we in. The second piece of the investment process is the tactical, and here's really where the weekly meetings try to discover new investment themes in the market that might be a little bit more short-term. In our weekly meetings, we analyze everything from the quantitatively what's happening in the market to sort of qualitative. And by qualitative, I mean what is happening that maybe in the political spectrum, or what's happening in the market that others might have missed.
In preparation for these weekly MAG meetings, we prepare a comprehensive chart packet that covers global macroeconomics, equities, fixed income, commodities, currencies, and what we're really trying to do is develop a view on both the economic environment and the key asset classes. So the investment process for the strategy is comprised of three components: the strategic asset allocation framework, which is where we try to develop a view on the medium-term outlook for growth and inflation. And given the outlook on growth, we can then dial up and down our equity exposure. And given our view on the inflation environment, we can dial up and down the portfolio's duration. The second component of the investment process is DoubleLine's core building blocks. And what I mean by this is our core allocations to equities and fixed income are comprised of our DoubleLine smart beta strategies, like our CAPE strategies, and our DoubleLine fixed income strategies. The third component of the investment process is the tactical asset allocation framework. This is basically where we seek to find opportunities from market mispricings, market dislocations, and construct trades using derivatives, ETFs, and futures, commodities, and currencies to find trades that have low correlation to traditional asset classes like equities and fixed income. This is where the bottom-up security selection comes into play. This is where we like to utilize DoubleLine's intellectual capital and work with our sector specialists to identify which are the best securities to own in a particular asset class.
I think one of the things that differentiates DoubleLine is that we spend a lot of time looking at dozens and dozens of economic variables to try to understand where we are in the economic cycle and when the risks are starting to tilt towards further economic weakness. We obsess about risk, and I think for us, market risk is the difference between what's priced into the market and what's not priced into the market. I think the multi-asset portfolio fits in investors' portfolios as sort of the fulcrum between their equity and their fixed income exposure. So most investors tend to know that they want a certain amount of bonds, they want a certain amount of equities, and that's really the right way to construct a long-term portfolio. The trick is trying to get the timing right to owning when you want to own equities, or knowing when you want to own more equities than bonds and so on. And I think the multi-asset portfolio can sit really nice in between those two exposures.
Investors can also benefit from our core allocations to our DoubleLine smart beta strategies and our DoubleLine fixed income strategies. At the same time, our tactical asset allocation framework allows us to construct trades that have low correlation to traditional asset classes like equities and fixed income, and therefore the return streams will be very different than the ones you would see in a traditional asset allocation strategy.